Hopefully you're listening. Did you see what the Fed did today? I hope you're paying attention because that affects real estate. Welcome back. I'm Tristan. I'm with Lab Coat Agents, a brilliant tribe, and I'm a real estate agent out here in California. Let's talk about the Fed raising the rate and how that affects real estate. And then let's talk about a great article that shows migration and inflation, and it's by Redfin. So we're going to jump into both of those things. But first, the Fed raised the rate. What does that mean? The good thing is, as I was reading this, I found one interesting article that quoted our economist, Lawrence Yun from NAR. Check this out, which was pretty cool, pretty enlightening for me. Says Lawrence, by the way, if you're watching, what's up, Lawrence? Haven't seen you for a while. All right, Lawrence Yun, Chief Economist for the National Association of Realtors, noted that the rate on the 30-year mortgage has risen far more this year than the federal funds rate. What does that mean? Well, here's what he says. It says, this implies that the market is already pricing in around 8 to 10 rounds of Fed rate increases this year. That's great, right? And he said this in an email. If inflation turns higher, though, then the Fed will need to be even more aggressive. And this is where further bumps on mortgages are going to go up. That's really good to know because what are we at? Like 5.5 around there percent on mortgages. Most people say we're going to end up in the low sixes now because the Fed also said we raised 0.5% today. Well, we're probably going to raise another 0.5% in the next meeting in June, and then another 0.5% again in July. But since the market's already said, we already know that. That's why we're not going to see a rapid increase in mortgage rates like we saw over the last month and a half or so. So I thought that was interesting. And I also wanted to share with you one other thing because people are asking, well, how else does this affect us, right? As a consumer, as real estate agents, and so forth. Here's the article that I'm going to go to. It's by CNBC. Here's what the Fed half-point rate hike means for your money. I'm going to scroll down to the very bottom, and of course, I'm going to put this article inside of the. If you're following on YouTube, please subscribe, share this. If you're following on Facebook, comment, like it, all the regular stuff. And I'm going to go here because there's a really good section right there. It shows you. I'm going to just increase it. It says the average interest rate for a 30-year fixed rate mortgage hit 5.55% this week, the highest since 2009, and up more than 2 full percentage points from 3.11 at the end of December. So we know that, right? So that's one thing. Interest rates are going to continue to creep up slowly. The other part is credit card rates are going to go up, right? And then there's another piece to this, which was kind of cool, that I didn't really anticipate this because I'm not a car salesman, but obviously car loans, they're going to go up too. So watch out for that. Federal student loan rates right here, you see that? That's going to go up as well. I thought that was interesting. Now bear with me because I have one other piece of information for you on this one, and then we're going to go into the Redfin article so you can check out migration and inflation in those areas. That was awesome. And here is the other piece that you may not know, and this was good for me because as I'm doing this research, I'm finding out more information for you. This is by Gus Faucher, Senior Vice President and Chief Economist of PNC Financial Services Group. He says, where we're more likely to see the higher rates show up is in short-term borrowing costs. So 1-year adjustable rate mortgages, CD certificate rates may move up a little bit more. So if you have your money saved in saving accounts, you'll start seeing a little bit of a tick, not much. So not very dramatic. I still suggest if you're looking at real estate, right now is a great time to buy. Prices are still going up because they're being driven by the rate pushing up. A lot of these buyers that were kind of in the middle are now saying, well, before the rate goes up higher, we better jump in. So that's what we're seeing, which was nuts. And right in spring and summer, where more people decide to move, I think the Fed did it right, waiting for this time so there wouldn't be that drop that we typically see in September. Now, let's take a look at the article that I want to show you. It's by Redfin, and you're going to love this one. I'm going to put a link to it. Let me scroll up to the top of it. It's called Migration Hotspots in the Sun Belt. are home to the nation's highest inflation rate, right? And let's read this with me here. An influx of people moving into Phoenix, Tampa, and Atlanta has led to rapidly rising home prices, one contributor to outsized inflation in those areas. Now, if you go through this whole thing, which I'm going to put in here, you'll see that inflation has been different in all of these different areas. And here's the inflation and migration for quarter 1 in 2022. This is from Redfin. You can see it's much higher in these areas: Atlanta, Phoenix, Miami, Tampa. They kind of outpaced everywhere else. And San Francisco's kind of on the low end. And you can see here, here's, as we scroll down, I'm going to share something with you. Not everyone in the country is experiencing inflation the same way. Can you remember that? Because all of these different areas are different. So when you hear from the news, oh no, there's a bubble. Oh no, there's inflation. Oh no, there's a recession coming. This is a massive country, and things affect, let's say, Florida and different parts of Florida different than they affect California, and even in California differently. San Francisco from LA and San Diego, right? Seattle is different from Miami. So pay attention to the small nuances, and this is why I love going to the local real estate agents in those areas and asking them, hey, how are you doing? How are the multiple offers there, right? It's important to go local and go into a niche. Now, let me go back and show you the article here. Redfin Deputy Chief Economist Taylor Marr, it's having an especially big impact in places like Tampa and Phoenix, which are attracting the most new residents and seeing double-digit increases in prices overall and even bigger increase in housing costs. Check this out in Atlanta, for instance. I have a lot of good friends in Atlanta. Wages are up about 7% from a year ago, but inflation's up 10%. I mean, look, inflation is even higher than the wages. Wages can't keep up. And rents, check out rents, 22% up. I remember that video we did, I think it was last week, when we're talking about how rents are going up. And because rents are just as expensive as mortgages, let me stop right here. Rents are just as expensive as mortgages. That means they're going to continue to go up. Like, why would I rent if I could buy as long as I have a down payment? They're equal. Now, as soon as rents start dropping, and then what does that even mean? If rents start dropping dramatically, it's like, well, I can live in a 3-bedroom, 2-bath home for $1,000. Why am I going to buy a house? Right? So that's not what we're seeing. We're seeing the opposite. Rents keep on going up in places like Phoenix and Tampa. So I thought that was a great correlation. So this is 22% up. That's massive. And here we go. Phoenix home prices increased 27% this year. That's a lot, right? And they were up 29% to 364,000 in Tampa. And look at Atlanta, 22%, and nationwide, 17% increase. Phoenix is way up above that. So these are the things I need you to be paying attention to. And here, let me wrap it up. It says Sunbelt metros like Phoenix, Tampa, and Atlanta will remain attractive to out-of-town buyers. That's true. They will, because pandemic-fueled remote work is here to stay. Just in case you were wondering, is that going anywhere? No, people are still going to work from their home. And people will continue to sell homes in pricey coastal job centers like San Francisco and Seattle. Why? Because they have massive amounts of equity. Right? I'm in California, I'm in LA, and the amount of equity I have in my homes is insane. So if I sell here, why wouldn't I move to a place that has a lower cost? Of course, I'm going to pay all cash for these things, right? And that's what's happening right now. So this article, I'm going to drop it in. I wanted to share this. Let me see if I can zoom in. So now you can see here, this is 2010 in gray to 2020, and in red, it's 2021. We saw that earlier. And this is metros with higher rates of net migration tend to have higher inflation. Let me stop sharing really quick, just so you could see my face. Higher inflation is tied to this net migration. Yes, I just told you, if I'm coming into an area like Phoenix, where I just sold my house here and I have all this cash to buy things out cash, of course, I'm going to drive the prices up. But more importantly, I'm going to spend stuff everywhere. I'm going to buy a new car. I'm going to maybe make a pool. I'm going to buy stuff here and there because I have all this influx of cash, right? So the inflation goes up with it. And so this is why I love this. I'm so glad Redfin put this together. Metros with higher rates of net migration tend to have higher inflation. And that's why the Fed continues to increase the rate, right? They want to curb this. Now, check this out because San Francisco's at the bottom. Of course they are, right? And Tampa, Phoenix, Atlanta towards the top, even St. Louis, Missouri, right? But Riverside, California made it up there. That's like the lower priced part of California. These are important things to look at. And to have that correlation is important. So I'm going to stop sharing this. Thank you for tuning in. I'll put up both links on there, and tomorrow I'll do a video on Jeff Bezos and the company that they invested in is Amazon for investments, which was crazy. I was like, what is this? This is super cool. So we'll take a look at that. Please subscribe, share this, and do me a favor and comment. I want to know your comments. I want to know your opinions because this is mine. What's yours? I learned from the comments, so go ahead and drop them in, and thank you for tuning in.